Get ready for a boom weekend for the property market with a record number of auctions across the country. That's our main story this morning. Also today, businesses amp up investment plans, prepare to bin your face masks, at least if you're in New South Wales, and why you should take a good look at what you're paying within your superannuation policy. It's Friday, the 26th of November, 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Then stay listening for Sean's chat to Ben Lipschitz, co-founder of Food by Us, an entrepreneur who's used technology to fill a big gap in the restaurant industry. But first, Sean, I love talking about property, so I'm really excited about this story today. The rush is on to sell homes ahead of Christmas, with Sydney, Adelaide and Canberra posting their largest auction volumes ever.
Yes, it certainly is. It's a super Saturday tomorrow, at least in the auction market. According to CoreLogic, a record 4,354 homes will go under the hammer this weekend across the country, with Melbourne leading the way with almost 1,900 auctions. Auction numbers are twice the level of this time last year and 17% up on last weekend. Now, late November, early December, where we are at the moment, is normally the busiest time of the year for home sales, but this year is particularly ferocious. Using domain figures, which aren't the same as CoreLogic, there are 36% more auctions across the country this weekend, with big jumps in Sydney, Melbourne and Canberra.
We've talked a lot, Sean, about whether the heat is coming out of the market. What does the rush to sell actually mean?
Well, it's good news for buyers, but not necessarily sellers. Part of the surge in house prices a few months back during the lockdowns was due to the lack of stock on the market. While prices are definitely still rising, the heat has certainly come out of the property market. The exceptions to that are Brisbane and Adelaide, where price rises are still actually accelerating. And the clearance rates across the country have fallen as well, particularly in Melbourne and Sydney. The October peak of 83%, that's across the country, has fallen to 70% last weekend. In Sydney, it was less than 69%, and that was the lowest of the year for that city. By Monday, Michael, we should have a pretty good idea of just how much the housing market has slowed. And of course, today is Black Friday, the beginning of the run into Christmas sales, where shoppers will spend around $60 billion over the next 5 weeks. It's going to be a spending bonanza this weekend.
Yeah, certainly will be. How did markets perform yesterday, Sean?
The S&P ASX 200 finished up slightly yesterday to 7,407 points. Technology stocks, which haven't done so well in recent sessions, reversed the trend with the tech index up sharply. Financial stocks were the worst performers. Now, looking at specific shares, Commonwealth Bank fell 1.5%, while all the other big banks, including Macquarie Group, underperformed. Big miners did well. Afterpay jumped more than 4%, and WiseTech Global was up 2.3%.
And what about overseas? What's happened overnight?
Well, Wall Street was closed for the Thanksgiving holiday. European markets were higher. The Aussie dollar is buying around 71.9 US cents. And OPEC warned overnight that a planned release of oil by the US may create a surplus of crude next year. The price of Brent crude fell back slightly overnight, while gold was a touch higher.
We'll be back in a moment with the rest of the day's business news. Sean, there's plenty of stories around to discuss this morning. Capital spending by business fell during the September quarter. First of all, bit of a definition. What exactly is capital spending?
Well, it's what companies spend money on to invest in their operations. So think about machinery or equipment or buildings, that type of things. It creates income and jobs. If businesses are spending money, they're employing people, they're buying goods and services. That has the effect of creating more income, more jobs. It becomes a virtuous circle. So we really care about capital spending.
Okay, then, given how important investment is to the economic outlook, how much should we be worried then that capital spending fell during the September quarter?
A bit, but if you look beyond the top line numbers, not too much. The Bureau of Statistics figures show that actual capital spending fell 2.2% during the September quarter, with spending on machinery and equipment hit hardest. Of course, Michael, this was during the lockdowns along the East Coast, so a pullback was expected. The survey also looks at spending intentions, and there's good news there. Businesses have big plans to spend more during the next 6 months. In fact, they've upgraded spending plans by nearly 9% compared to what they thought they were going to spend 3 months ago. The mining sector is leading the way on that. In short, the Delta outbreak of COVID-19 hasn't had long-lasting effects on investment intentions. And that is great news for economic growth.
Okay, now I mentioned at the top of the show some new rules in New South Wales around face masks.
Yes, once the state's vaccination rate hits 95% or on December 15, whichever comes first, face masks will only be needed on public transport and at airports and on planes. The 1 person per 2 square metre rule will be scrapped, and QR check-ins will only be required for high-risk venues like hospitals and churches, aged care facilities and, of course, hairdressers. Proof of vaccination won't be needed for most activities, though retailers will still be allowed to ask. That's all really good news for New South Wales, which has a 92% vaccination status at the moment. It recorded 276 new cases of COVID yesterday and fortunately no deaths. It's also good news for the rest of the country because New South Wales tends to lead the way when it comes to changes around COVID, except of course for Western Australia.
What about elsewhere in the country? What were the cases like yesterday?
Well, Victoria recorded 1,254 new cases and 5 deaths. Its vaccination rate has hit 90%. Good news for that state. Queensland Premier Anastasia Palaszczuk said she was confident the state's vaccination rate would hit 90% by early January. It currently has a 75% vax rate, just shows how far behind Queensland is. There were 8 new cases in the ACT. The Territory has now hit a vaccination rate of 97.5%. That's easily the best in the country. The Northern Territory had just 1 new case recorded yesterday, and South Australia reported a new case as well.
Now, Sean, this is an interesting one. Q Super is facing a class action that claims it overcharged life insurance premiums to 140,000 members.
Yes, Q Super looks after $120 billion worth of members' money, mostly Queensland public servants. The class action comes after the Australian Financial Complaints Authority found that Q Super had overcharged just one of its members, a medical doctor, for life insurance by classifying him as blue-collar rather than a professional employee. Now, professional employees are entitled to a cheaper premium. Class action firm Shine Lawyers have used that decision to launch the class action yesterday. There's a way to go on this, but it does highlight how difficult insurance within superannuation is. Most super funds offer life insurance and most of it have it, even if we don't know about it. It's really important to read the fine print to know how much you're being charged though, what you get from it, and actually whether it's right from you. Governance around this area hasn't been good. We saw that in the Banking Royal Commission, and in some cases it remains pretty bad. This is all your money. Premiums can cost hundreds and hundreds of dollars. If you have that in your super fund rather than paying for something you don't want, that will compound over years, be worth thousands or tens of thousands of dollars when you retire.
Yeah, good advice. Now, Sean, you've talked a fair bit in the past about the payments group EML, and yesterday the company's share price jumped more than 30% following some good news from the Irish Central Bank about its subsidiary in Ireland.
Yes, EML has been embroiled in an inquiry into its subsidiary, PFS Card Services, which is based in Dublin. The Central Bank of Ireland has been considering limiting its prepaid card program, and EML has had to set aside money for remediation and potential fines. But PFS Card Services will now be allowed to sign new customers and launch new programs as long as it stays within some parameters. That triggered the big jump yesterday, though EML's share price is still 40% below what it was in May. That's when the Irish Central Bank intervened. Still, very good news for the shareholders of EML who have suffered for the last 6 months.
Now, Sean, another company that moved yesterday, certainly not as much as EML, but Fisher & Paykel's share price jumped 4% yesterday after it announced a solid, if unspectacular, half-year profit.
Yes, that's a good way to put it, Michael. Fisher & Paykel is listed in both New Zealand and Australia. It designs and manufactures products used in acute and chronic respiratory care, surgery, and the treatment of obstructive sleep apnea. It's also a major company on the local ASX, but doesn't really get much airtime. It's got a market cap of $18.8 billion, which puts it between Newcrest Mining, the gold company, and QBE Insurance. It's a top 25 company on the ASX, and during the COVID crisis, it was one of the best performing stocks on the bourse. Nearly 3/4 of its revenue comes from respiratory products, which were in high demand during the height of the pandemic. Just an interesting healthcare stock to keep an eye on.
And staying in New Zealand, that country's Reserve Bank has blasted Westpac, saying it needs to see significant improvement in the bank's risk governance.
Yes, the comments came after an independent report into compliance issues at Westpac highlighted historic underinvestment in risk management in New Zealand. Some of the criticisms included poor communication, excessive formality at board meetings, overstretched resources, and a reactive approach to managing risk. Governance to risk has been an ongoing challenge for Westpac, not just in New Zealand, in Australia as well. And yesterday's Reserve Bank of New Zealand report shows that the bank still has a long way to go.
Okay, Sean, what's making headlines in today's news media?
Well, the Australian is reporting that Australia's economic recovery has been bolstered by the creation of 350,000 new jobs in just 5 weeks. New hires in New South Wales and Victoria over the fortnight to November 7 jumped by 55 and 45% respectively, compared to their troughs at the height of lockdowns. And the Financial Times is reporting that the World Health Organization has called an emergency meeting to discuss a new coronavirus variant, first identified in South Africa and Botswana, that's believed to be spreading faster than first thought.
Running through some of the other stories around today, Prime Minister Scott Morrison has rejected calls for a stronger Federal Integrity Commission, something like New South Wales ICAC, saying what happened to that state's former Premier Gladys Berejiklian was an absolute disgrace. Mr Morrison said the new Commonwealth Integrity Commission will not have similar power to state anti-corruption watchdogs. Labor has called for a tougher federal commission. And just as a side note, Sean, the Sydney Morning Herald has published a survey that shows that 54% of the state's voters still like and respect Ms Berejiklian even after all the dramas with ICAC.
Pretty incredible.
Yeah.
Treasury Wine Estates has unveiled new leave for workers dealing with domestic and family violence. It includes up to 10 days paid leave and emergency financial support. Treasury joins other big organisations, including the Commonwealth Bank, Westpac, Qantas, Mirvac, BHP, Rio Tinto and Telstra, in providing the leave. It's great, Michael, that corporates are providing the leave, but it's such a shame they have to.
Yeah, well said. Online retailer Kogan.com says it hopes to hit $3 billion in annual sales by the 2026 financial year. The company also wants to set up an in-house delivery service to overcome some of the logjams that are going on at the moment. Kogan.com also recorded a second strike against its remuneration report at its AGM yesterday. That helped push the share price down more than 4% to its lowest level since May last year.
Staying in retail, Michael, homewares group Adair said it will buy Focus on Furniture for $80 million. It hopes to gain a foothold in the bulky furniture market. That is something worth chasing. It's worth about $8 billion, that market.
Wow. The Australian Competition and Consumer Commission says it won't oppose NAB's takeover of Citi's Australian consumer business. The deal will add to NAB's credit card, personal loan and wealth management portfolios.
And finally, Pepper Money upped its profit guidance by around 13% yesterday, triggering a near 5% jump in its share price. The group listed in May and in recent months has trended lower until yesterday. It said that loan originations have risen, with mortgages in the 10 months to October hitting more than $5 billion.
Okay, what's the key overseas news this morning, Sean?
The Solomon Islands has gone into a 36-hour lockdown in the capital, Honiara, after protesters looted stores and set fire to buildings, including the country's parliament. The protesters are angry at the country's PM and angry about the lack of development in the Solomons. Prime Minister Scott Morrison last night said Australia will send troops and personnel to help the Pacific Island nation. In news we don't need right now, Bloomberg is reporting that China's increasingly extreme COVID-0 policies are standing in the way of a full recovery for the shipping industry and prolonging a crisis that's emptied shopping shelves. China prohibits crew changes for foreign crew and recently imposed a 7-week mandatory quarantine for returning Chinese seafarers. There's not enough people to man the vessels, and that's delaying deliveries. And finally, there's been a slew of economic data out of the US over the past 48 hours, most of which suggests the world's biggest economy is picking up steam and inflationary pressures are growing. The Personal Consumption Expenditure Index, a key measure of price rises, last month posted its biggest year-on-year rise in more than 2 decades. Then the minutes of the Federal Reserve's Open Market Committee meeting were released. They show that some officials are pushing hard to tighten monetary policy. It all comes as the latest data on applications for US unemployment benefits fell to their lowest weekly level in more than 50 years. It all adds up to more pressure to lift interest rates in the United States.
Okay, up next, Sean, is the Daily Interview, and today you're speaking to Ben Lipschitz, the co-founder of Food by Us.
It's a really interesting model. They sit in between the wholesalers of food and the retailers of food and help organise restaurants so that they can get all their deliveries on time with minimum fuss. Really interesting business.
Yeah, it certainly is. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Friday, the 26th of November, 2021. Make sure you're following the podcast. Join us on LinkedIn, on Twitter and Facebook, and sign up for our free daily newsletter at fearandgreed.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.